Let's take a look at some information and charts on AAVE for Brave New Coin. So according to AAVE, between version 1, version 2, their AMM market, and their Polygon market, they have 21 billion in liquidity. Essentially, AAVE is a classic lending and borrowing platform where APYs and APRs are determined by supply and demand. And one issue we're running into with this DeFi stuff is at what point can we continue to call it DeFi if a majority of this liquidity is in centralized stablecoins? So DAI, for instance, is over 52% USDC. I haven't added it up, but the liquidity here that is representative of centralized stablecoins is quite substantial as a percentage. So it's kind of like the ship of Theseus, where we just keep adding these bricks that are centralized stablecoins. And is it fair to continue to call this stuff decentralized? You know, if USDC, for instance, gets hit with some regulatory action in the US, one of the least likely to get hit with anything, but let's say they do, this DeFi stuff is going to take a massive hit. So there's always a regulatory risk or a centralization risk in dealing with this stuff. And as long as you're aware of that and okay with that, then it's all gravy, but don't get it twisted. You know, this isn't exactly completely decentralized in that sense when a majority of this lending and borrowing is USDC. So always watch out for that. Big caveat there. But the protocol works as intended. They rebranded from Lend a few years ago now, I think at this point. They're expanding to multi-chain. They keep upgrading. It's getting harder and harder to sort of understand the metrics here because not only do we have multiple versions and multiple types on one chain, but now we're going to have multiple versions and types on multiple chains. So even looking at the TVL isn't quite clear as far as the whole picture until you go to their website. Because if you look on DeFi Pulse, you'll see 12 billion TVL, right? If I look on the bank, I'm looking at version 2, which has this much TVL. So it's getting harder and harder to figure out all the stuff that's going on with these protocols. Stuff like Curve that's just continually upgrading and getting more and more things added onto it. Just something else to keep in mind. This is the app. Very simple to use. Very clean UI. Essentially you just deposit the underlying asset into the smart contract and it collects interest, or you can borrow from that smart contract and you accrue an amount owed. And if your collateralization ever falls below a certain level, you get liquidated. And that's what people ran into around a month ago now on the 18th when prices fell dramatically. But you can always add to your collateralization and adjust that accordingly. They do have an AMM market, which is pretty tiny, at around 142 million relative to their 21 billion total. I don't exactly know. I feel like I should know more about this than I do, but I don't know how or where this gets deployed as far as to generate these APYs. Is there a substantial amount of risk relative to just the lending and borrowing, which based on the APYs there probably is. So I don't exactly know what's going on here, but another place to park your USDC other than just the vanilla lending and borrowing. In general, as APYs increase, so do risk, or so does risk. So that's always important to keep in mind when you see these 2,500 APY stuff on BSC, for example. They have a staking component, governance component, usual song and dance. You can view it all through your dashboard. I don't have anything here right now exactly, but we do lend things out on Enzyme. If I look at the version 2 stats for AAVE, borrowing volume is continuing to sit at all-time highs. I wonder if there's some sort of hidden ceiling here preventing it from going higher. But it's good to see those borrow volumes increase again after that flush on the 18th. And here you can see those big liquidations on the 18th. 157 million on that day, which may not seem like a lot, but if it all happens at once on chain or slowly on chain, like rolling through the blocks, that has a massive effect on price that already has momentum to the downside. So price is going down, we're liquidating, it's just a massive long squeeze. That's always going to be the case for this stuff in all of DeFi in general. Another caveat for this type of thing. Here's Polygon stats for AAVE. Continues to increase as far as TVL is concerned. And it looks like the Polygon market doesn't have substantially more APYs or sizing on borrow volumes, whatever. It doesn't look like there's giant incentives to lend on Polygon versus ETH. That may change over time. But relative to what you can get for USDC, it's certainly lower, but ETH and BTC, you get a higher APY as a deposit. So that's always going to affect where the TVL goes. If we look at on-chain stats for the token, transaction counts largely follow price. So the fact that they're falling and now increasing makes me slightly bullish. But again, this doesn't take in the entire picture on all the chains at this point. So it's going to get more and more messy from an on-chain metrics perspective as well. You'd have to include Polygon AAVE or Solana AAVE, whatever else it eventually moves to. But it looks like transaction counts are trying to recover. Average transaction values are at multi-month lows as well. And this is just part of the price picture. To see transaction counts increasing would be more bullish than bearish, certainly. But you don't necessarily need AAVE to use AAVE as far as the lending and borrowing stuff. So it's probably never going to have a robust on-chain activity. NVT continues to decline since February, which is good. It says there's more and more on-chain activity relative to market cap. Even with prices all the way up here at 300 per AAVE, NVT is still on the decline. So that says there is more room in price for the upside. Active addresses is also telling you that there's very little kind of speculative activity because in general you don't need AAVE to use AAVE, and you get some rewards in AAVE, but you're not going to see robust on-chain activity there. If you look at Google Trends for the term AAVE, if we dial it back to like 5 years just to see, AAVE is a Finnish word for ghost, so it's going to pick up those searches as well. But you can see in the beginning of the year where AAVE searches spiked to all-time highs along with price, and briefly spiked again when price was back at all-time highs, and now it's back at those lows again. So I always like to watch this to see, is there some leading or lagging effect going on with searches and retail interest as far as people getting into AAVE. Another broad search you can look for is DeFi crypto, which hit an all-time high a few months ago, which was probably related to BSC more than ETH, but that has declined significantly as well. So we're kind of in this middling period where there's still searches, people are still looking at it, but gas is low, not a lot of activity going on. Borrow and lending APYs are on the lower end, and that could continue to decline as more stablecoins get printed and deposited. There may just be a permanent ceiling on those APYs now that we have billions and billions of stablecoins. But in general, APYs will increase if people are borrowing relative to supply. Then if we compare AAVE to all the other lending and borrowing markets, Compound and Maker, AAVE is currently leading as far as outstanding loans. As a percentage, they have 37% of the market share, and that will obviously increase if more chains adopt AAVE or if AAVE goes multi-chain relative to these other projects. So that's always something to keep in mind as far as lending dominance is concerned. But it's good to see those borrow volumes pick up again post May 18th liquidation spike. Flipping gears to technicals, we have the half-year MA, the 183 MA, and then 5 times that up here. And we can look at the 365, we can look at the 2-year, which is the 730, but this kind of fits the best, I think. So pre-2020, AAVE had these extended periods below that 183. Then they flipped gears from lend to AAVE as far as branding is concerned. DeFi took off and AAVE took off. So this may look more bullish than it is, but if this acts like October 2020, then this is suggesting a huge buy with massive upside, right? So if you believe that to be the case, you're just buying anything from here to zero with the expectation of tapping that multiplier probably within the next 6 months. So, that's a pretty good opportunity cost plus risk reward if you're a believer in the trend continuing. AAVE is kind of like a shark. It's got to keep moving to hold its value. And if the market kind of stalls, lending and borrowing platforms aren't really necessary because no one's lending, right? And if no one's lending, no one's going to be borrowing because APYs are zero. So it kind of all feeds on itself. Anything with a moving average multiplier generally has a pitchfork attached to it as well. So this is the 2-day. We can pick 3 points, get a rate of change. It's also signaling we're at the bottom as far as the expected range. So again, there's a decent risk reward. I just look at these targets and I'm thinking that's insanity, right? It's up from $1 in 2020 to 300 today, even being down 50% from the highs, right? So this is telling you, okay, you buy here, you sell at 2,600 plus. You know, maybe that happens, but I'm not quite on board with that narrative just yet. What's more likely is this falls out of the pitchfork and starts some sort of slow bleed back to the previous consolidation at around 100. And Link is no different. So these will probably act together, but Link has even more chart history prior to 2019 to fill this in. And Link is also threatening a close below this pitchfork, which would invalidate the trend since then. But again, with Link, you know, if this doesn't invalidate, it's a great buy, right? So if you want to take that risk, then that's worth being price agnostic here. If we look at the 5200 cross, potentially a bear cross coming, the first one since October 2019. And really this volume picture kind of tells me everything I need to know as far as anybody who's bought down here and hasn't sold yet isn't going to care if price is falling. They're just going to probably lock in profits at 160, at 100, at 60, right? If they're still holding from a buck, or if AAVE, the team, is selling, you know, whoever, they're not going to care what price is, right? Because they're up a bajillion percent since 2020. They're even up 2-3x since January. So ultimately, I think a lot of this DeFi stuff needs to relax a little bit and pull back. Daily Cloud is also telling you we're not bullish yet, even though it's been quite choppy. Yearly pivots also showing a pivot at 60. So 60, 120, 160, 220. Those are all the levels on the way down. But again, most of that volume since August 2020 has been in that $20 to $80 range. Very little volume up here historically. And this just is another way to say that support is in the previous consolidation range. AAVE BTC also, we can pop out a pitchfork. You can see how overbought this gets from time to time relative to this rate of change. It's also on the lower end of the expected range. So if this breaks, you know, it's game over as well for AAVE BTC. But historically, if this holds, this has been a good buy zone, right? That's the balance. Do we have another leg in us across the board? AAVE BTC's 5200 still is bullish, and historically it's bounced on the 200 every time, right, since 2019. And if we start to sell off everywhere, you know, AAVE is not going to be spared from that demise. Here's the daily cloud for AAVE BTC below that as well, so also hinting at early signs of bearishness, even though this daily cloud hasn't had a lot of signal relative to noise since 2019. AAVE ETH has a bearish 5200 cross already, so the DeFi season, you know, especially AAVE, which was one of the earliest movers in 2019, is starting to look weaker and weaker relative to ETH, relative to BTC. And if this support holds, which it doesn't look like it will based on the 50 and the 200 cross, definitely bearish here. Looks like ETH is going to be the play in the near term relative to AAVE. What this could do is an Adam and Eve VU situation, but you'll see the 5200 cross bullish again to signify some sort of long reentry relative to ETH. And even on the 2-day cloud, it's below. The cloud really, for the first time since 2019. So overall, I like AAVE. It's one of the backbones of DeFi. Obviously, the issues we're running into across the board with DeFi is how decentralized is it if the majority of the underlying assets are centralized stablecoins. So there's always a regulatory risk or just a general centralization risk there. The on-chain analytics are getting more and more convoluted because we're going multi-chain, multi-version, multi-type. So it's getting harder to know what's actually going on there. Technicals kind of point to rich or wrecked really soon as far as where this could go in the next 3 to 6 months. So, you know, that's it's a big coin flip with a lot of upside if this holds and a lot of downside if it doesn't. So to me, I don't really have an edge there, but I would watch gas prices specifically, because if those continue to climb, that says meat's back on the menu and we can continue the ascent for things like AAVE and Link. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio on Enzyme.finance, non-custodial portfolio management that I trade for Techemy Capital. You can see the AUM performance allocation. You can see all the trades I make. You can see what I'm doing. We do have AAVE in the DeFi portfolio. It was one of the few that was spared from the culling over the weekend, as most of the other DeFi stuff keeps pushing lows. I mean, look at the balancer chart. That that looks quite bad. But even if you don't participate in this, you can always just look at what I'm doing. All of this is done through DEXs. I also have the ability to send crypto through AAVE for yield. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.